Nearly forgot to switch on the microphone. Good evening, everyone. Good evening. A big warm welcome, the usual. Thank you very much for joining me this evening. Leon, good to see you joining me with. I know Diana's going to be coming in later, so I recognize some of you, and it's always great to have you here. Diana, there we go. I got you there. Just let me know. I'm making sure I pronounce your name correctly, by the way. So that's how I read it, but I wanted to make sure it's okay. I recognize a few, so great. Thank you, guys. Hi, hello, good evening. So excuse I put the camera on. If the camera's a problem, I apologize. So I'm just casually for this evening. So I hope that's not going to offend anyone. Tonight's topic, obviously, this IC Markets webinar, and the topic is we're going to do technical analysis. We're going to have a look at the current state of the FX market. Good evening, good evening. So presumably the sound is good, camera's good, no issues there. Okay. Right, so let's kick off and have a look. So we've got the risk disclaimer, and there are obviously some newbies in this evening. So thank you very much for all of you who have not attended these webinars before. I don't know if you might not be new to trading, or this might be your first webinar ever, or it might be your first one with IC Markets or your first one with me. So thank you either way for giving me your time. Tonight we'll, first of all, a bit about me. I am based in the City of London. I'm predominantly a day trader. So if I'm doing longer term positions, I am looking at weekly or daily positions, but I would say probably most of my time is done doing intraday trading. I'm probably about a 70-30 or maybe 80-20 ratio in terms of time. And so I tend to look for positions on the 15-minute or 1-hour time frames. I usually look at the 4-hourly for direction. I am a with trend trader, meaning I'm always looking to trade with the trend. And and price action based as well. Technical trader, not too concerned with fundamentals. So in this session today, on the agenda, we're going to analyze price movements of major forex pairs, including euro dollar, dollar yen, obviously cable, which is GBP, sterling against US dollar, and obviously the others. But we probably have enough time to go through all of them. We'll see. We're going to talk about key trends, any patterns or potential trades on multiple time frames. Excuse me, and building a watch list for you to take away and act on. So that being said, let's go to the charts and let's go through and have a look at this. So one of the things I wanted to show you was I took a trade, just to recap. So I would like there to be consistency throughout these webinar sessions, but my goal as a presenter and as a trader, because my trading doesn't take more 15 minutes, 45 minutes a day, it really doesn't. Scanning is quick, and then it's literally just the placing of orders and managing of those trades. So I want, for those of you who attend on a regular basis, I'm trying to build up your knowledge because I can't dispense it all in a single hour. So I also want to give you a sense of what real trading is actually like. So if I can, and that's not something you can influence your way of thinking in one session. I have to do it through repetition in order to, so that there's, so that to a degree I have that, what's the word? So that, what I say has credibility. So on the last session we did last week, which we was focusing on cryptos, I took a trade. I was looking at it, I think it was on Bitcoin. And so I just want to go through that again. I just want to quickly wrap up on it. You can actually see the trade orders here. And so very quickly to wrap up for those people who weren't necessarily familiar with it, the trade idea was that price was looking relatively bullish at the time. Zoom in again. Oh, there we go. That's why I'm looking for it over there. So I just want to zoom out. Sorry, just trying to get my bearings. There we go. So the try was it was a buy trade, and so basically what I was looking for was on a much higher time frame. So I'll put it in here just to do this because this strategy, this approach works in currencies as well. So this is not a waste of time. This is valid. In terms of that. So I'm just going to put in that was, what did I say, Bitcoin? Where are we going now? It's my XPT. Okay, so at the time, basically, if we go up to a higher time frame, at the point, last week, the markets are looking bullish. They were looking really, really nice and bullish at this point. There was a flat level here. I was looking for price to break out, and if price broke out, I would expect it to head up to here. During the session, we went down to the lower time frames, and we were looking at a period here. So actually what happened was price was just below this level. Price was looking particularly bullish, specifically on the 1 hour. If I go back, there was in particular a bullish candle right there. Okay, so we had an uptrend in place. We had a flat level up here where price was potentially going to break out. It looked very bullish at the time, so I decided to take the trade. So what I did was I split the trade into 2 orders. I took 0.5% on one trade and 0.5% on the other. Basically, the logic was this. My expectation was there was a good chance it could break through this level and go on up. It didn't, but let's just go through the trade idea. So it's got to make sense to you. Okay, and so the idea was entry above the high. We had a general uptrend. We had a level. I acknowledged that that was a level of resistance, and the idea was put stop loss below here. And so the idea was to split that into 2 orders. One would take profits at 1-to-1, which actually was right there. You can actually see where the arrow is. So that was the 1-to-1 was the first take profit. And then actually the second one got stopped out, which you could see where it got stopped out, which was at that point. So it was a 1 up, 1 down. Basically, the idea was that the first one would be a 1-to-1 target, and then you'd have 2-to-1, and your 3-to-1 would be up here. But the first one hit its target and took some profit, and then the market could not break through that level and subsequently came out and stopped me out of that trade. And so it should have been a break even. It should have been a break even trade setup. But if we go here and look at the history, you can see here that actually the first one made me 47 bucks and the other was minus 50. So it was just a little bit more in terms of that. And it's interesting because they were both executed, should have been executed at the same places, but there was a slightly less on the one and the other. It should have been a break-even trade, and it wasn't. So for those of you who attended, I wanted to update you on that and explain the logic. But if you recall, I spoke to you and said, look, first of all, this is why I split the trade ticket. So if I can get to break even, then, because remember, think about it like this. The only reason we do partial profits, take partial profits, is to reduce our losses. It's an amazing benefit, but you can reduce your losses. And let me ask you this, if you reduce your losses, do you think if you're trading, you're going to be in a better psychological place if you just have fewer losses? And that's what it does. Anyway, and we took the trade because at the time, although it was late in the day, it looked like a valid setup. I don't really have an issue with that setup. I discussed the pros and the cons, and the outcome was one of the outcomes that we discussed. Cool. There we go. So I just let it play out. I didn't interfere with it from when I placed the trade. When I spoke to you guys, I let it play out whichever way it did. So if it hits, so that's purely leaving it, no stop loss management, none of that. Cool. Now let's go back to the topic at hand. We can bring this back up, but I thought that was very cool. I really enjoyed that. I have no issue with taking trades live, but in terms of regulation, it's really tricky to do that. You're not really supposed to do that. But I thought there was nothing wrong with me talking you through the idea and explaining that. Okay, so tonight we're going to be looking at the currency markets, and I want to go and start off with that. Okay, so we usually have the dollar index, which is here. So let's see what we've got on the dollar index at the moment. Let's get a sense of what's going on the daily, first of all. So we could see that from sort of Wednesday last week, is that Wednesday, Thursday, Friday? That's right, we've got the dollar strengthening. DXY, for those of you who are not familiar with it. Yes, it does. So actually on that note, sorry, one of the comments is it does help mentally to know that you have a win rate. And actually, this is a really, really good point. You can't, it starts with faith when you're taking trades. You have faith. You're like, well, I hope the strategy works. Because no matter how much someone assures you or how much it makes sense, you still need to go through you probably need to go through 50 trades of the same strategy to start to go, okay, this definitely works. I can't deny it. Even if I wanted to, this definitely makes more money than it loses. And so unfortunately, there's no way you can get around this as a newer trader. You cannot get around the fact that, unfortunately, the only way you can get to a place where you trust your strategies and you have faith is to take trades with those strategies. You have to get 50 or 100 trades under your belt, live market conditions, because your headspace is different when you're trading live. It's like walking a tightrope that's 1 foot above the ground and then it's raised between the buildings. It's a different, you're doing the same thing, but the environment can kind of make your head spin. It's a different thing. So, but you can't get around it. You have to do that. So on one hand, I want to say, don't be afraid. Know that you're going to have to take 50, 100 trades just to get started, but you don't have to lose a lot of money in those. You're going to make all your mistakes in the first 100 trades. You're going to be at your worst. You're the worst trader you're ever going to be in the first 100 trades. But how much you lose, how many losing trades you have, depends on how emotional you get. If you let yourself spiral, you know, how much you risk, do you move your stop loss, a whole lot of things that you can get under control. But also what's interesting is the amounts that you lose really comes down to how much you risk per trade. And for me, if I could go back in time, I would say to myself, I know the standard is 1% per trade, but just start with 10 cents a trade. Because what I'm really trying to do is learn how to read the charts, understand my strategy, get in the habit of calculating my risk correctly. There's so many other things I'm trying to do to get right before I even do that. So I'm also trying to get trades under my belt. So if I could go back in time and say, Adam, for your first 50 trades, first 100 trades, just keep it to pennies for the trade. Because what you're actually trying to do is just nail the strategy and the technique and the process. Because you can't, unfortunately, it's counterintuitive. But to get to the point where you're consistent, to get there faster rather than slower, you have to slow down and do things properly. It's kind of like slow is smooth and smooth is fast. That's kind of how it goes. So it's a really important thing. How long do you need to back test your strategy to know it works? Surprisingly little. I mean, you just have to look at 10 or 50 like setups, and you'll get a sense very quickly. If you go through the charts and look at those setups, you'll get a sense very quickly that if it works or not. And in theory, you could do it randomly. So if it's on a 15-minute time frame, you would pick a 15-minute time frame last week and check how many setups you got that day, and then randomly check a month earlier or a year earlier on the 15-minute time frame, and so pick random periods. And so that will give you a nice mix it up sort of session, and also let you do that. Sorry, because I realized for those of you who came in for tonight's topic, we will cover it, but you're getting bonus stuff here as well, even if you don't necessarily feel like you are. Because I want to talk about real world trading. And it's applicable to any trade setups that we see as we create a watch list tonight. This is my usual process. Usually I'll just go straight to the charts, but because I've got regulars returning, we can also talk about, you can ask questions. It's an open session. Okay. So the point is, I'm saying you can't avoid doing that, but you can definitely avoid how much you lose while you are learning. So you're going to make all your mistakes, most of your worst mistakes in your first 100 trades. So don't go at a full 1% because it's just going to cost you a lot. Go at 1/10% or pennies. If you want to demo trade it, that's fine, but just don't go at full rate. And if you calm yourself down and say, okay, I'm going to do 100 trades like this, you'll actually get to consistency faster because your focus is on the right thing. So you're mastering the technique, the strategy, the risk management, the process. Your emotions are getting under control. You're going through the motions, and you start to get very stable. And then you can start to up your risk per trade. And by that time, you know the strategy, you recognize the patterns, you do all that stuff. In my opinion, to do trades live, it helps you mentally. Yeah. Okay, so here's a question here as well. What is the best indicator for volume? There's a couple here. Obviously, there's a couple of these ones here. You know, it's interesting. I didn't really mind the accumulation distribution and the standard volume. A lot of these give you like 95% of the same information. I mean, there are some differences between accumulation, distribution, and money flow, but generally speaking, they're sourcing most of the same stuff and coming through. I would say, especially if I was looking at, say, stocks, probably go straight with just standard volumes. Volume analysis, volume spread analysis with currencies, is not necessarily as effective. It's not necessarily as effective because it doesn't go through a central exchange. With stocks, however, and commodities, I believe, especially with futures, you should be getting the same volume readings as everybody else, and I think it's very reliable. If you get a breakout after a consolidation with stocks, and then you get a volume spike on that, it's very reliable. With currencies, I'm not as convinced that the volume thing, and in that case, I would just go with volume, straightforward volume. Okay, sorry, let me try to get back on track here because some people don't like it if we kind of do this. So I'm looking here at the dollar index. So DXY is the US dollar index. It's the performance of the US dollar against a basket of other currencies, which includes sterling, Japanese yen, the Swiss franc, Swedish krona, obviously the euro dollar, which is the biggest currency traded against the US dollar. So it gives you, at a glance, will give you a general idea. Is the dollar strong or weak at the moment? Now, there are times when the dollar, if I'm shouting, let me know, but I get passionate and I don't mean to do it. There are times when the dollar's not really doing anything. Over the last few years, excluding the last year, I've seen plenty of times where the dollar's just ranging. And so you're looking for trends in other currency pairs which are moving. But the last year especially, the dollar has been moving very intently, with intention, with purpose. And so the dollar index is a good indication. So right now we are seeing we had a stronger dollar, then we saw a bit of a rejection. We're seeing the dollar come back up again. This is important. So now I'm talking about tonight's topic. This is a relatively strong reaction. Price was unable to get past that point. Let's call it 114.50. This is a strong engulfing candle. And so we had to move back to the old high. So all of this is very normal, this behavior. Boom, boom, breakthrough, come back, retest. Most of that is kind of relatively standard. We get that. That's sort of what's happening now. We had price pull back into the moving averages, which over here, the 10 and 20, and we appear to be heading back up to here at the very least. So for me, this is the most likely scenario for the next couple of days. I want to see what happens. Do we manage to push through that? Do we manage to break through this and this? This is an area, excuse me, this is an area where there's going to be some resistance. So for now, what we can tell for sure is that the US dollar is strengthening, and it's high probability that it's going to carry on until it runs into that. Now we're going to go ahead and start looking at the other major pairs. So we go ahead, we have a look at euro dollar. I also got the clean objects tool. I found this. I Googled this and found it. So it's a cleanup all drawings tool. Very nice. Just drag it and drop it on, and it just removes any other, if I've drawn a whole lot of tools and stuff in on that one. It's pretty cool. It's in the scripts section. So let's go look at euro dollar. So we go look at euro dollar, and we can have a look at it here. I'm going to get rid of the volume indicator just for now. And I've got the MACD and RSI, they're pretty much standard. Okay, so we had price pull back up here into this area, which sort of makes sense, and it's continuing down. So this is it's not 99 or 100% inversely correlated with the dollar index, but it's highly correlated. It's at least, let's call it 85 to 95%, depending on it. So currently my expectation for euro dollar, which makes the most sense, is for it to head back down into this area. That's what I'm expecting for now. I think there's a good 60-65% chance that's going to be the case. Yes, could we turn around and go this way? Yeah, we could. I mean, the reasoning behind why we could do that is because we're very overextended. We're very, very, very overextended on that monthly basis. And at some point, we're going to have a retracement. At some point. The question is, are we going to have it now or are we going to have it later? When you look at the last week candle, that was really bearish off a previous, these two kind of lows here. So if you just draw a line through there, price tested that, tested again, came through, rejected it. Generally speaking, the implication is that we should carry on down, back down to here, generally speaking. So we're going to see if that's going to be the case. That's the highest probability, most likely scenario, but not guaranteed, just most likely scenario. So that's my expectation for now. If we go look at GBP, we go look at sterling. Same kind of thing. We're here. If we look at it again from a weekly perspective, we had a very strong weekly candle there, a little bit of a rejection candle here. This is quite significant. So bear with me because this is a little bit outside my purview, but a lot of the cable weakness was triggered by bonds. All right, I think it was gilts, UK gilts. Anyway, the government then instituted a program, buyback, to start balancing that out. And so part of the rebound in sterling is subsidized by the government. It's okay, they do it, it's fine. Well, initially it's fine. Why I'm saying that is there isn't an equivalent program on the Aussie dollar or euro to buy back stuff. So there's nothing else. So that's why the candle for GBP is quite big. And also, if that program is going to make a difference, we could see GBP turning around. We could see it continuing up. We could. But that is definitely what has contributed, not just the dollar taking a breather, but the pound actually. This is quite a strong bullish candle. So we could see it push up a little bit further. That could happen. But in every other respect, it looks pretty much the same as the euro dollar, as though it's currently going to continue down towards these lows. In fact, I would say more like this, because there's the ultimate low, but you could see here that a lot of these candles rejected off here. And when you get that type of thing, that's because price was struggling to get past there. And so we could find price come back to here and bounce back or back down to there. And that's what we're looking at this week. If all the markets, if we get that dollar failing and starting to push back, and we suddenly see sterling strengthens and starts breaking above this high, and the euro strengthens and starts breaking above that, the implication is, because it's very bearish, that implication is that maybe the longer term trend is taking a bit of a breather. Maybe we're going to start getting a bit of a retracement back up into these levels. So now we're looking at, in the original agenda that we saw here, we were talking about multiple time frame correlations, higher time frame. So that's what we're looking at. We're looking at, is price going to come back to here at some point to test this for resistance? But at some point, we really are overdue for the market to come back and test it. Now, we are living in uncertain times. We've got dollar yen doing some crazy stuff. We've got a war, obviously a serious war at the moment with Russia and Ukraine. We've got a couple of things. And so the markets are taking strain. We're living in uncertain times. And so it's possibly smarter to just expect the market to stay irrational, to use an expression, to stay irrational, or to keep doing what it's doing until it doesn't, rather than expecting it. Like what I mean, what I'm trying to say is that there are times when, in the last 10 years or whatever, when the market becomes overextended, at some point you're like, okay, it's due for a correction, and it does. But there are unusual periods in between when we're going through like what we are now with a almost potential global inflationary issue, fears of a recession, and certain other things, big market corrections, where the market is going to break its usual behavior. And so that's what I'm talking about. So we're going to look at Aussie dollar. So Aussie dollar today just broke through. It continues its bearishness to the downside. So it's weaker. The Australian dollar is weaker. And I'm going to go show you some scanning processes that I use that help. Okay, good. So I just saw your comment chat, Leon, about that 0.5%. Yeah, I do 0.5% to 0.25%, and I know this sounds odd. To give you a frame of reference, 0.3% profits per day, 1/3% profit per day, 5 days a week, 22 days a month, because there's only 21, 22 working days in a month, comes to 6% a month, and 6% a month doubles your account is 100% a year. Okay, just broadly speaking. So if you were able to guarantee that you got 1/3% in your account every day, that will double your account every year, which is, so the point is, very small steps can have big consequences. So when I say that I'll trade 1/3 or 1/4% per trade, it'll be during the day. So I might take 5 or 6 trades, maybe 2 or 3 are losers, and I'm still up, let's say 0.5%. But if I'm up 0.5% for the day, or by the end of the week, I'm up 1.5% out of having taken like 30 trades or 20 trades or 10 trades, I'm still okay. And that can happen taking 1/4% per trade. It really can, because my targets can be 3-to-1 or 4-to-1 sometimes. And so 0.5% could turn into 1 or 1.5%. Anyway, so the point is just to say that I don't stress about it too much, and it helps me stay really, really calm. And when you're dealing with large accounts, because I do trade, and this is not a solicitation, but I trade some funded accounts, and those are large amounts, multi-million pound accounts. And so 100 grand or 50 grand a trade is a lot of money. So I just bring it right back down. Like, okay, 10, 15 grand a trade. Okay, cool, I'm up 50 grand for the day. Even if it looks small, psychologically, that's just where it's comfortable. Funny enough, if it's a small account, if someone said to me, okay, I've got £1,000, what can you do with £1,000? Like if it was my money and I was like, okay, what can I do with it? then I might be going at 2 or 3% a trade because it's like 20 or 30 or 40 bucks or something a trade. But again, those are personal choices, and there are reasons why I might do that. But essentially, once the account got to a certain size, I'd start bringing it back down. So I guess maybe I have a sense of value at some point. Okay, so I wanted to show you this because I wanted you to see that in every single one of these cases, when we look at Kiwi dollar, you could see it's heading down. You could see that strong bearish engulfing candle continuing down. Let's go back. Aussie dollar is very weak at the moment. We look at sterling, which is actually higher up here, hasn't come back down to the lows. And we can see euro dollar is sort of halfway to the 2. So what would I say out of those 4? I would say it's definitely the dollar driving it down. We can see that. That's the dollar strength. We can see the dollar index heading up, and we can see all the majors heading lower. Out of all the majors, the weakest one appears to be the Aussie dollar. Why? Well, because it's already created fresh lows today. It's already, overextended to the downside. Kiwi dollar is just testing below those lows at the moment, and euro dollar and cable are slightly higher than that. So what can we say so far? We can say, look, we've got a strengthening dollar. One thing that's highly probable is that it's going to go up to the recent highs, which is probably going to cause the other majors to go down to recent lows. We can also say that Aussie dollar is the weakest of the bunch. Now here's where it gets interesting. I'll come back to the dollar CAD, dollar yen, dollar Swissy pairs. This is my personal preference. I like to have these 4 first because they're against the dollar, so that if there is any visual correlation, I will see it if I check all 4 of those in sequence. Okay. The other thing I will tell you, which you couldn't possibly know if you've only started trading in the last couple of years, dollar yen does its own thing. Dollar yen has always done its own thing. So if it appears as though it's doing what everyone else is doing, that's a fluke. Generally, it can go down when it should be going up. So what I mean by that is, because all of these are heading down, what should happen now that the dollar's in front, these should be heading up. They should be. And as it happens, dollar yen is generally heading up. Yes, that's true. Dollar CAD is trying to head up higher as well. Dollar Swissy is absolutely heading up. Okay. But dollar yen, out of these 3, dollar yen over the years has often done its own thing. I've had situations exactly like this, and dollar yen is just tanking consistently, week after week after week, is going the other way. So the point is, Bank of Japan have their own policies. The US is their biggest trade partner, and so they can buy or sell the currencies. They can do it themselves. And of course, being the inventors of Japanese candlesticks, they have very, very good traders who can read price action. So that's what they would do. Do I apply any fundamental, Adam, do you apply any fundamental data to your trade setup? So my routine is, I'm just going to quickly go and do this one. And so what I will do is look at the high impact news. So my filters are, I'm looking at high impact stuff for the most part. You could possibly do this, but I think that'll give you a lot of stuff. And that's it. I'll look for everything else. I'm not concerned about Chinese yuan or renminbi or whatever, or the Swiss franc. Apply the filter, and then I'll be looking for stuff. So I just want to know if there's any major stuff. So things like FOMC, CPI, these are going to be, right now, these are going to be important. A year ago, they didn't matter. A year ago, we were in a bull market. Nobody cared about this stuff at all. Excuse me. But now, because everyone's afraid of recessions, triggered by inflation, everybody's worried about inflation, and therefore that's what the market is super sensitive about. So there's times when certain numbers mean more to the market as it's more stressing about certain things. We when the rates start coming back down, as they will at some point in the future, then the market's not going to be worried about them. The market's only worried about it if the rates go up. So there's, even though, so the point is that that's what I'll do. So I want to know if there's anything that day I need to be aware of, because it could potentially, I could be in a trade and it could hit my stop loss or spike, and it could go in my favor, but it introduces unpredictability. I'm looking for a trade or a trend that is just trickling along, doing its own thing. Nothing is interrupting it. It's not driven by anything. So I'll be aware of those. So those are what I would consider fundamental factors. It's really interesting because I'm a big fan of value investing, believe it or not. Although I'm technical here, I love value investing by Warren Buffett, big fan of that. And it's interesting because the concept of buy and hold is that the smaller time frame jitters don't matter because the fundamentals will ultimately help the markets, the stock will play out. So the fundamentalists argue that the lower time frame noise doesn't matter. And day traders argue that the bigger picture doesn't matter, because what's really happening is day traders, ladies and gentlemen, are operating in the noise. That's all they're focused on. They're not worried about the bigger picture because they're operating in the noise. So if the noise is a downtrend, they just trade that. If it changes to an uptrend, they trade that as an uptrend. And because each day they effectively start fresh, it doesn't really matter because they're just trading the day-to-day noise. And so it's important to accept that the two don't really kind of, yes, it's possible you can get an uptrend like the Japanese yen that we had for the whole of the last year was just generally going up. And that's great because that was the fundamentals playing out. But also keep in mind, by the way, that sometimes any government can institute, it's not always reacting. Sometimes they're not just going, oh no, it's inflation, we better up the rates. Sometimes they're going like the Bank of Japan or a forward-thinking, long-term thinking government might go, you know, we want to change something here. So then they just start changing policies and doing stuff. Or maybe they go, you know what, we should weaken our currency to increase our imports. They do different things. And so they're not always reacting. Sometimes they're actually instituting a change which starts a trend. Yeah. So in answer to your question, is I don't worry about the bigger picture too much. I'm aware of it because remember, every week I'm doing that monthly, weekly, daily analysis. But on a daily basis, yeah. So I always feel that the fundamentals, the longer term trends that you see are generally the fundamentals playing out. They generally will tell you, for whatever reason, this currency is strengthening. One of the hardest things to do when you switch to technical trading is to stop needing a reason why. You don't need an explanation. Let me give you an example. So this is important. If I go surfing in the ocean, I get up in the morning, I head to my favorite spot, and I get there and it's flat. It's like a mirror. There's no wind, there's nothing, and it's just smooth as glass. Ironically, although the weather's good and the sun's coming up, there's no point in me going out there. There are no waves. There isn't anything happening. So I might as well go home. Next day I come out and I look and it's stormy and it's windy and the swells are just all over the place. The waves are going sideways. They're going all over the place. There's no way there's no point in surfing that because there's no pleasure to be gained from it. There's no benefits and none of the conditions that I need are there. It's too dangerous. So I go home again. So the next day I come out and I look and it's perfect. It's exactly what I need. 3-4 meter swells. Maybe that's my comfort zone. Beautiful. There's lots of sets and I look and of course there's other surfers out as well because they're not, I'm not the only one looking at this stuff. And if you know surfers, by the way, they'll have apps on their phone now, so they know which bay has got the best weather ahead of time. But anyway, the point is, I see these surfers going out, and there's waves come in sets. So I go out there and I paddle out. Of course, I can swim. I've been trained. I've been up. I've surfed a couple of waves, and I'm waiting for my sets. And then I see a series of waves coming in. I can't get them all, but I can get the first one. Maybe I miss it, so then I have to get the next wave. Anyway, so I get on the wave, ride the wave. The wave dies down. Fine. So I just paddle out. I don't get offended. I don't get upset that the wave died down. I just get the next wave. Maybe the next wave's amazing. Maybe I go and take another wave. Now I'm a bit tired. Maybe I slip up because I'm tired. I don't get up on my board on time. I get dumped or I fall off my board. So these are all things that I think, even if you've never been surfing, you can relate to what I'm telling you about you. Sorry, my nose gets itchy. I don't know. It's the beard. And my point with this is that at no point during this process did I really need to know how the geography of the land underneath the water and the position of the moon and the time of all these different things, the fundamentals effectively produce the waves. I know that they produce waves. I know if I see the set, I can surf them. If it's stormy, I can't go. If it's flat, I can't go. And so my point here is that what we do here in trading is we're looking for all the sets of waves. We're just looking at the conditions. We don't really need to, there isn't any meaning behind it. We're just saying, look, if you want to, that's fine, but you don't need it. And I'm just trying to convey why that's the case, that you don't have to. For day trading, you don't need meaning. And the sooner you let go of that, the better, because actually that's the thing that holds you back. If fundamentally you think that Tesla's got to go up, but it's bearish and it's setting up with a bearish pattern, like a double top or something, you just can't bring yourself to sell. So you end up buying, and then it's a losing trade because you've got the fundamentals that have created a bias in mind. So that's stuff you have to keep in mind. Okay, so let's go back to this. I love the questions, by the way. Keep them coming. How do I filter this again? How do I filter that? Sorry, just give me a bit more detail specifically on what you mean when you say filter, and then I'll go through it. Would you say it's easier to catch opportunities during this uncertain time, or the opposite? What we're seeing now, okay, I'm going to have to apologize because I literally just said to you the fundamentals don't matter. But what I want to add to that is that very rare occasions throughout every 10 years or 15 years, you have like a bear market. And so in a way, the fundamentals make sense. We've got inflation, and so the rates go up, which causes the markets to head lower. And we can see it's clearly a bear market and there's bearish sentiment. So actually, at that time, finally, the market heading lower makes sense with what you're hearing in the news. So in that sense, you've got the fundamentals matching up with that. But you must remember, when we come out of this, there's going to be people who are bearish throughout the first few years of it because they're going, the conditions haven't improved, we shouldn't be climbing, but the markets are climbing. And then when the markets have been climbing for a while, those same people are going, the market can't go any higher, we should be bearish. So you've got bears all along the way. So the only thing is that right now, when the market's been bearish the way it has been, you've got everybody in agreement. Everybody's in agreement. But when it starts going up, that's when you get your kind of split things about it. And that's where the fundamentals get really kind of tricky. Because the fundamentals, if the fundamentals were never making it sound like the market was overbought or it's got a crash, or there's always some bad news everywhere. So that's where it gets tricky. But we do, now and again, every few years, we get a market correction where it's you can see it completely correlated and tied to the fundamentals. And so do I think it's easier to catch opportunities? I think when the trends are strong, then you've got to go for it, because you can get periods where the trends just kind of go away. Actually, when the market's pretty happy, it can sometimes just go into a coma. There's nothing motivating it. And so I think, yeah, look, there's risk in shorting a market because the market can eventually turn around and go up. So I don't think that's necessarily it. I need to think about that. It's a good question. I'll answer that at the end. How do I filter this again? Just let me, for news. So just to quickly say, so I'll go through to this one. I have an account that I just created. It's my own one. And you can go through to, there's a filter section over here. You can, when you go to the calendar up here, you go to the filter thing, and you can just tick for high impact, medium impact, low impact, or all news. I tick that, and I can tick, I just have all of those ticked. Gives me, make sure it's for all these currencies, and just say apply filter. And then I get all that information. Okay. Is the Aussie down because the central bank put it on rates? I believe that is part of the case. Okay, the Aussie dollar has been weak for obviously for a while. If you go back to the bigger picture, it's been weakening. But yes, I believe that has contributed, has added to its weakness. Yes. Cool. Great questions. Okay, so let's do something. Now we're going to do another exercise. We're going to go through all the euro pairs. So let's start with euro dollar. Okay, we'll look at it on a daily. Euro dollar, well, the weekly as well. Weekly is looking pretty weak. I do think it's a bit overextended, but that doesn't matter. It's still weak at the moment. Let's look at all the other euro pairs. Euro GBP. So Euro GBP had a big spike up with the pound weakening. So the pound weakened, and so the euro strengthened against it. Now it's come back a bit. We've broken that low. So generally this trend is kind of done. So now it's trying to decide what to do. So if you want to get a bit of perspective, you go up. So if you're lost, remember, imagine you were lost in a forest, you have no idea where you are, but you've got a drone. So the drone, you can send it up, and as the drone gets higher and higher, you can, if you're looking at your camera, you can get a sense of where you are. So the best thing is, if you can't really feel, you feel like you don't know what's going on in the chart, is to go up. Just keep going up until you get a sense of it. And if you still don't, then fine. Then it's probably not there. So what do we see on the weekly? We see that we were in an uptrend. We had a big move up here. That's a very strong rejection of that. That's a significant rejection of that. So I would say that implies the market is probably not going to want to go back very easily. Doesn't mean it won't creep that way, but it's not happy about it. Then we've got a bit of a bullish candle here. So at least we know roughly where the levels are. We know what's going on. Then we look at it from a monthly perspective, and suddenly you get a sense of what's going on here. Yeah, we're just range bound, ping ponging all over the place. So there's no clear trend on this one. Okay, so next thing up. So what I mean is it looks bullish at the moment, just the last few days, it's pulled back. But I think given the bigger pictures, just ping ponging, I'm not going to worry about it. They don't expect much from it. Euro Aussie. So Euro Aussie currently looks really bullish. Really does look quite bullish. Look at this from a bigger picture. Yes, it's range bound, but that's a double bottom. And I would like, for those of you who aren't familiar with this, that's a slightly, slightly lower low, but we definitely have higher lows from both of these. So we've got bullish divergence and a double bottom. Usually that means bullishness. I think there's a high probability we're going to push through at least up to there, up to that one. Okay, it's got to get through this level. I agree, it's got to get through the level, but I'm looking for something like this. So that looks more bullish than bearish at this time. Okay. Daily looks good. It's trying to push to that level right now. You're a Kiwi. Also bullish, like a real mess over here, but comes back. So for those of you not familiar with this, we've got the 50, 20, and 10, and we're looking for, they're fanning out, so there is a trend in place, and we pull back into the moving averages, produce the bullish candle, we're pushing up through that, and I think we're going to keep going. So it's a very similar setup. We look at that weekly, we've got a double bottom here as well. We've got definite bullish divergence, meaning it's slightly higher low, but treat it as a double bottom. And you can see here, you've got that trending higher. This is trying to trend higher here as well. It's not actually as bullish as Euro Aussie, but it's generally the same idea. It's also broken above here. It's got another level to get up to there. It's a bit overextended. My point is it's trying to go a little bit higher. So I would consider that bullish. Then we've got Euro Yen. Euro Yen is range bound. Why do I say that? It's stuck between this high and this low, and if you want to, those lows, you can include those lows as well. Not really offering. So let's go up. Let's go up the time frames, up to the weekly. Okay, so on the weekly, it looks a little bit different. We are trending a little bit higher. We can see the 50, 20, and 10. But also, you can see it's getting, what's the word? I'm a South African, so I want to say the word spazzy. I just mean as in it's starting to like get jittery around these levels. I don't mean to offend anyone. I just mean it's starting to, that term in my mind comes from when they were doing, they were trying to prevent shark attacks. And so they came up with this like electrical thing that would disrupt the shark's electrical thing. If it comes too close to you, it would start spasming. That's the word. So it looks like it's spasming a bit around these areas. And so it wants to go higher. The push is higher, but it's struggling at these areas. Look at it from a monthly perspective, and it's back up at these highs here. So it's struggling a bit. So all of that together tells me I know which way it wants to go, but it's not offering a lot of clarity now. It's not the most attractive chart I've seen. You're a Swissy. Which one? Which trade have you been in from since last week? Next question. Will you take your trade when it is a golden cross, or will you use price action for more confirmation? The answer is kind of yes to both. Golden cross, especially on stocks, could tell you, okay, it's more bullish than bearish. But then I would look for a very specific entry, which would be like that specific candlestick in the moving averages. I've been talking about this one for a while. Lower lows, but definite bullish divergence kind of across the board here. This wants to turn around, but it's really going to pick up speed once it breaks above that. And I think it's fair to say there's a parity level here, 1.000 whatever, 000, I should just draw it like that. And I think it wants to go up to that. For now, I think it's fair to say, for example, this is a trade idea, not the best one I've ever come across, but it is a valid one. This is trying to change into an uptrend. Remember I said to you, all of you, well, those of you who know me, you've got to see that change in trend. We've come down here, then we've sort of this, then we've come up here, we've broken that high. Now it's come back to that high and it's produced a bullish candle. So the next thing it needs to do is if it's going to do that, is to go up. So how do we do this? Entry above the high, stop loss below the low, targeting profit 1 to 1, and then 3 to 1, probably up here somewhere. Parity is probably a really good point, and probably take that. I'm not saying, like, there's times when I can look at a setup and go, that is almost certainly as certain as I can be is going to hit on. There's other times when I look at this, I can tell it's trying to turn around, it's trying to push higher. If it is going to turn around, this is the way it's going to do it. That's going to be the candle that's probably going to do it because it's a bullish candle. Here's the 10 and 20 moving average. We're not above the 50 yet. Price is above the 50, but the 10 and 20 aren't. But that's it. It's broken above the 50, coming back and retesting it. If it is going to head up in the future, this is the one that's going to do it probably. So then there's it. But if I have doubts about it, then I don't risk 1%. I risk 0.1%. Okay. So point is, Euro Swissie looking more bullish than bearish. Euro Aussie looking bullish. Euro GBP sort of bullish. Euro Yen sort of bullish. Euro Kiwi sort of bullish. Let's go through on this one. Look at this one. Look at this uptrend. Beautiful. Again, guys and girls, lower lows, higher lows as well. Higher lows there, bullish divergence, break above here. So it's done exactly that. There's that level, price is kind of blah, 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 and then it's breaking above it. It's trying to do that. Trying to turn around. Pull back, potential bullish candle, entry above the high, stop loss below the low, take partial profits at 1-to-1. There's a strong level. I think that's a fair level. Price is going to try to get there. We'll see. Those are kind of similar types of ideas there. That's Euro CAD. So I would say that it is fair to say more of the Euro pairs are bullish now than bearish. Let's go through the pound pairs quickly as well. So starting with sterling. So there was a big strong reaction heading down a little bit. Then we'll go with pound Aussie. Look at that, sideways, then it dropped down, big reaction back up at you. Essentially, it's trying to get back up above that. Let's look at it from a weekly perspective. Look at the size of that candle. It's got to get back up above that, but it's trying. So again, I'm going to say more bullish than bearish right now on Kiwi. Look at that. Look at that beautiful break of resistance. Break, come back, retest, pushing upwards here. Very nice. And look at this. Look at that, from that low to that low. Check it out here, you're trending higher. This one as well, same thing again. Generally trending higher. It's trying to turn around and head higher. Let's go see it from a weekly perspective. I mean, it's a mess. It's a mess on a weekly. But look at that candle. I think it's unlikely it's going to head lower. I'm not saying trade it. I'm just saying, what do we take away from this? GBP pairs are also looking, so far, more bullish than bearish. And yen. Straight down, test the level of support, push up, but you can see that spasming, that spikiness. That's a problem. So although it's bullish, it doesn't mean, it could mean it's just going to get stuck here because there's definitely just appears not to be any buyers above that level. But so you can see there's something going on. It's having a reaction on Swissie. Okay, so I do know fundamentally, so because fundamentally, yes, I know the Swiss National Bank has a problem. It's always strengthening. So just generally, every pair against Swiss franc is generally hitting lower. And so I can see what's going on here. I think there's a significant level there. I think if the SNB, if the Swiss franc starts, it's always had a problem. So if you go back and have a look at Euro Swissie or Dollar Swissie, you look back, going back years, it's always creeping lower. That's why they've had to intervene here and depeg it here. It's always had that problem, and they're having that problem now. So I can see where it's trying to turn around. I think what it's trying to do is maybe a weekly or maybe a monthly retracement back up to parity. That's what I think is potentially happening there. When I compare it to pound Swissie, I think it's even weaker, and I think if it does, it's going to try to come back up here. I think it's going to try to do that. On CAD, also trying to turn around if it can here. Big strong candle, but overall getting sort of weaker. So there's a couple of these where I think there's a longer term downtrend in play. Pound Swissie, pound CAD, that I think it might struggle to change. But the others it looks relatively bullish against. I would say more of the Euro pairs look stronger, look more bullish. Some of the pound pairs look bullish, a couple look bearish. Let's go through the rest quickly. Aussie Kiwi. Aussie Kiwi looks more bullish than bearish. Aussie Yen. Okay, so now we're starting to test the lows here. The fact is that the Japanese yen has been strengthening for a very long time. It's now looking like or a lot of the yen charts are heading up. They're now starting to look, ladies and gentlemen, like they might want to head down. So I'm going to consider looking for shorting opportunities for the yen pairs to the downside. I still want to break through these levels. I'll get more confident once we start to break through those levels. We haven't got there yet, but that is what I'm expecting it to do. So again, I'll do the same thing. I'll look at all the yen pairs. So euro yen is a bit messed up. Pound yen is not offering much clarity. Aussie yen is starting to look quite nice and weak. Kiwi yen is also starting to look like it wants to, like the weekly wants to break down and head down. CAD yen, wait for it. Okay, so CAD yen was a very strong trending one, has pulled back, bullish candle. Okay, we'll come back to that because CAD yen has a potential trade idea set up there. Swiss yen also is producing, if you ignore this candle, just for now, you've got a series of lower highs coming into a level of support. If it breaks below here, I think we're going to see it head down to here. And I think that is what it's trying to do. So in other words, you've got something like this happening. If it breaks through, we're going to see that happening. So you've got a series of lower highs, looks more bearish. Okay, so all the yen pairs to me are either sideways or starting to creep lower. Dollar yen, always in its own basket. The Japanese only care about their business with the US. They don't care about their stuff with other stuff. So you'll always find dollar yen will do what it does. Over the last year, it has just kept going. Whereas against the other currency pairs, it's had moments of weakness and strength. So we were looking at the Aussie pairs, Kiwi pairs, same thing. So let's look at Aussie yen was heading lower. Aussie Swissy is heading lower because Aussie pairs are weak. Aussie CAD heading lower. So right now, a lot of the Aussie pairs are heading lower because the Aussie is weak. We saw that now, Aussie US dollar. So for me, the trading opportunities so far, excluding the majors, meaning anything against the US dollar, I'm looking, if I see some very nice setups long on Euro pairs, makes sense. On the GBP pairs, it better be like if they're looking bullish, I'll go bullish. If they're looking bearish, I'll go bearish because it's giving mixed split signals there. The Aussie pairs, I'm expecting bearishness because it's looking weak. And the Kiwi pairs are also looking weaker in the same kind of, along the same veins. Look at, yeah, so you've got, that's your Kiwi Swissy and your Kiwi CAD. They're all generally looking bearish. So the Kiwi and Aussie pairs are very highly correlated, like 80 to 90%. And so generally if Aussie weak, Kiwi's weak. And then we've got CAD yen on the weekly chart. So on the weekly chart, it is just generally trending higher. It's pulled back into the moving averages, produced a bullish candle. I think there's risk with this trade, but you could entry above that, stop loss below the low. Again, targeting 1 to 1, 2 to 1, and 3 to 1. Here's my concern. I think if a trend is strong, this is what it does. Starts out big move, small retracement, big move, small retracement, less of a move, deeper retracement, less of a high, deeper retracement, less of a, and then it starts doing this, and then it breaks to the lows, and then it starts kind of doing this kind of thing. And so it turns around, sorry. This feels to me, with this failure here, and then we managed to break through, and then we immediately come back down, I think this is slowly starting this process. So for example, here you've got a higher high, but your MACD is starting to go down, and this is starting to produce lower highs. So you're getting, excuse me, you're getting the, it's starting to slow down. So there's some risk with this. It doesn't mean I could put an entry there and stop loss there, and it could break up, hit my 1 to 1, 2 to 1, give her a double top rejection, and get out. And so I'd still make money on the trade. What you do as a trader, guys, you get the trade idea, which is this uptrend and a bullish candle and all these different things. And then you, through experience, which is taking the 50 trades, 100 trades, 200 trades, you start to learn, you go, setup looks good, because when you drive a car, okay, from the very first time you drive a car, there's too many things. It's like you're trying to pat your tummy or rub your tummy and pat your head. It's like you've got to check your blind spot, change gears, check your indicator, look at the other traffic. You've got to do all this at the same time. It's the same when you're trading. So for your first 100 trades, your brain is trying to learn. It's still trying to learn to read price action, learn to identify support resistance levels. learn how to calculate position size, learn how to look for the news, learn for all these things, looking left and right and doing all the same thing. For me, it's muscle memory. So I just look and I go, okay, it looks good. And all this stuff has become muscle memory because I've done thousands of trades. And so here my brain immediately goes, look at that failure there. My brain's already established a trend. Now it's going, that's a bit funny. There's a bit of a reaction there. They look very close to each other distance-wise. I mean, that's further. That's not as far. It feels like it's losing strain. Then I look down here and I go, oh yeah. So this will come in time. The only way you can do that is to, obviously I will try to relay as much as I can. That's the only way you can kind of do that. I'm keeping an eye on the time. I don't want to keep you, ladies and gents, over. Let's look at dollar sing. Bigger picture, what's going on? Okay, bigger picture, you can see strong level up here. So it's range bound for the most part. Is it overextended on the monthly? Sure. Dollar's overextended. Everything's a bit overextended if you're asking me. We could be in the next few months, we could find we double top and then we start coming down and we get a bit of a correction. I think that's likely to happen if the inflation starts coming down, and actually this week's CPI figures might give us a clue about that. I don't really care what the figures are per se. What I mean is if it's a little bit or more or whatever, I do care about the market's reaction to that. Because as I said to you, these days the market is more sensitive to the same types of numbers it gets every other year. But now it's because of recession and blah, 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 it is more sensitive. So the market can be sensitive about stuff. Excuse me. So the actual number, yes, of course, if we're talking about 8% inflation or 10 or 12%, yes, it does matter. What I mean is if the number comes out and it's 6.1 or 6.2, that doesn't really bother me. That's not important. It's more about how the market reacts to whatever the number is, because maybe it was going to react just as bad if the number was 6 instead of 6.1 or 6.2. I just want to know how the market's going to react to it. So you do two things. You kind of, and again, remember as a trader, the whole idea here is I'm just going to stop going on about that because I don't want to keep going on. So let's recap quickly. Currently, the dollar looks strong. So currently, the dollar implies that we're going to see the dollar charts where the dollars first are going to start heading higher unless they're overextended. Sure. We expect them to head lower on these pairs as well on the majors. The Euro pairs, generally speaking, look nice and bullish. I like them. The Aussie pairs look generally nice and weak. So in that order, I'm expecting dollar strength for now. By the end of the week, if something's changed, if suddenly the market's reversed and by Friday, Euro dollar has done this and has done it across all of them, then that's good. Because even if I was in a couple of trades short and I got stopped out, the implication of this reversal probably means next week it's going to keep going. So even if I make a few losses now, the whole point is that if you have a losing trade, you're hoping that the very reason you have a loss is because the market is changing direction, as opposed to just being random noise. You're like, okay, all right, so I took a hit. I'm okay with that because I thought there was a possibility the market might change direction because it's overextended on the monthly, it's overextended on the weekly. Maybe there's a bit of bullish divergence. So it could turn around. Maybe I just get that loss. Maybe I get 1-to-1 or I get break even. Anyway, but if it does do this, all right, fine. But then by next week, we're probably going to start getting moves to the upside if that's going to be the case. But for now, if it's bearish, I'm going to sell. And so you're trading in line with what the market is doing now, ladies and gents, not what you think it's going to do in the future, but what it is doing now. That's what trend traders do. You're not going to buy until the market goes into an uptrend. Then you are a buyer, but you needed to change trend first. Those are the rules. So even if you think it might turn around in the near future, you still short it for now, or you don't trade it, but you don't buy it. So recap, dollar pairs currently looking strong. Therefore, I'm looking for trades that go in that direction. Don't have to trade everything. Just pick one or two good setups, ideally. Don't, take in partial profits. Euro pairs are looking bullish. Therefore, there could be some good bullish setups on those. That's great. GBP pairs are split, which is a bit of a worry. Aussie pairs mostly look weak. Kiwi pairs look weak. And then CAD yen look like it might have a setup to the upside. Was it CAD yen that might have a weekly setup? Yep. And that was it. And that was the case for all of those different currency pairs. So I do think there's some good opportunities shorter term. I'm only worried about the shorter term until the market gets to those levels. I'm just worried about shorter term opportunities. That'll probably take us through till Friday, maybe. Let's see what happens on Friday, where we finish by Friday night. That'll give me a good direction for next week. Questions and wrap up. I understand how you determine the dollar is weak via the dollar index, but how do you determine the strength of other currencies? Okay, so I think I just did that. Sorry, I think I literally just did that. I went through Euro pair, Euro Aussie, Euro Kiwi, Euro Yen, and I basically looked at the daily and the weekly, and I could see that, for example, the Euro pair is all generally trending up. And then I was like, okay, so the Euro is strong. So I did the same thing. I basically just did it manually. If I go through all these, I can go, okay, Euro dollar is trending down, GBP is trending down, Aussie is trending down. Okay, that's the dollar. So basically, I'll go through a batch of 7 or 8 charts, and then I can tell if it's mixed. So for example, sterling, GBP, is mixed because here it looks bullish on pound Aussie, pound Kiwi, but we know that because Aussie is weak. How do we know Aussie is weak? Because we went through Aussie Yen is going down, Aussie Swissy is going down, Aussie CAD is going down. So we know it's the Aussie pairs that are weak. So that's basically what I've just demonstrated to you. And so I believe it's objective because I did it in front of you guys. Also, I have some experience doing it. It's a good question. I believe that it's objective because I did it in front of you guys. I made my case. I said, that's what I'm seeing. And I have a bit of experience to back it up. And that's how I've done it for years. That's a great question because generally there's always an amount of subjectivity. But part of the reason I do these webinars when I don't have to, because the income I make from this is not really a thing. Part of the reason I do it is because if I'm only ever reporting to myself, I'm not held accountable. But when I present to you guys on a 2 or 3 times a week, I have to, my reputation, it sounds odd, but my reputation's on the line. I'm trying to credibly show you guys that this can be done. And that is a great way to keep myself in line when I'm not in front of you guys. It's a crazy idea. I noticed recently Bank of Japan was keeping the price in range, didn't want the US dollar to go higher. What is your opinion? That wouldn't surprise me at all. And honestly, the dollar yen, for me, the trick is always to trade what you see, because if it's looking bearish, then trade it bearishly. No, like, in other words, because it can do its own thing. It really, really can. And once you know that, because sometimes my brain would go, it should be doing what dollar CAD and dollar Swiss are doing. But I've had times when, you know, euro dollar's going up, pound's going up, Aussie's going up, Kiwi's going up, so the dollar's weakening, and dollar CAD is going down, and dollar Swiss is going down, and dollar yen's going up. Like, it defies it. But after a while, when you realize Bank of Japan, they just do their own thing, they have their own policy, then you realize just to go with whatever dollar yen is telling you. So there's a question saying, I've been trading for months now, but I keep losing money. Do you have courses on trading? There's so much in that I would love to give you some great advice on things on that. I'll send you an email on that. I'm not soliciting for training or anything like that, but I can maybe point you in some directions. Okay, cool. Absolute pleasure, guys. So let's go back and wrap this up. There it is. So what I wanted to, again, I really encourage you to attend these on a weekly basis. My goal is to consistently show you from week to week. So the things that I showed you last week to see how the market's unfolding. And any of you that joined me last week, Wednesday or Thursday, you saw how well the markets kind of played out based off that. So in order for you to believe that this can be done, you need to kind of week by week go, yeah, okay. And then I'll give you ideas of which markets should be offering safer trading opportunities. And the beautiful thing, sometimes we just talk about cryptos, but the technical analysis is the same, whether we do it on currencies or whether we do it on stocks. But sometimes some people just want to talk about cryptos, and we do that. And some people, we talk about that. I know I've run over, but it's because I got a lot of newbies in tonight, and I want to make sure that you guys understand there's a lot of value in these webinars. If you have questions, bring them. I'm up for that. And and I always appreciate you guys. Leon, thank you. Always an absolute pleasure as well. So I will follow up with the rest of you, but I do want to let you go. If you have any questions to do with your account, your platform, get in touch with the lovely folks at IC Markets. That's it from me for today. Have a great week. I think there's some good potential stuff out there this week. Like I said, relatively safer speaking. Don't go nuts, don't go crazy. There are some sensible opportunities. You don't have to rush. Okay, and I will let you go now. So again, I love it. Thank you for your time. I appreciate it. I'll speak to you soon.